name is Will Pike. I'm Vice Chairman at CBRE, and I lead our net lease practice. The primary drivers for demand in 2019 and what we expect to see in 2020 are the favorable risk-adjusted returns within net lease. That's driving both domestic demand and global demand, and we expect that to continue. International investment has picked up within the net lease sector due to the favorable risk-adjusted returns, coupled with the fact that the lease structures within net lease are primarily bondable in nature. So if you're an investor, overseas investor, it's very easy to own this asset type in the US. The increased investment activity in secondary markets is due to better yields when compared to the gateway markets. So we're seeing markets like Nashville, Austin, Portland have significant investment dollars within the net lease sector. In addition to significant investing in secondary markets, we're also seeing a substantial amount of investment in tertiary markets. And again, this is due to better yields compared to gateway markets. And also we're seeing a lot of the major occupiers, both domestic and global, developing in these markets for their workforce. The risk for net lease investors would be unstable credits and tenants and how that would impact you if you had some form of default. The way you would insulate yourself from that is to make sure that you're within market rents and you can backfill your investment. Trends that I expect to see in 2020 are more build-to-suits, both in office and industrial, like we saw in 2019. On the retail side, I expect, again, robust development despite the headlines, especially in QSR and other forms of retail. Again, we still have a very healthy development pipeline. But again, more build-to-suits in office and industrial and continued development. While the final volume from Real Capital Analytics has not been published yet, we expect the net lease sector to surpass $70 billion of investment activity, which is substantial. This will be the highest year on record. Significant because we've had major growth in the sector, and net lease is no longer a niche portion of the commercial real estate marketplace. Now, again, it's over $70 billion of investment volume. It's a global business. As a firm, we did experience a record volume of sale-leaseback activity. We do expect for occupiers to continue to use this financing tool into 2020. Occupiers have thought more proactively about their real estate owned assets, and this trend will continue, both from large corporate headquarters to secondary distribution centers. Expectations for 2020 are similar to what we saw in 2019. Robust demand, and will have a healthy supply of new product in industrial, office, and retail. So I would expect the 2020 numbers to be very similar. As a firm, we believe that rates will stay relatively low, and we'll have ample supply of debt in the capital markets to fund all of these acquisitions. So it should be a great year.